All right, so we're taking a look at section 8.2. I'm going to say the right chapter now. I need to do a little bit of talking ahead of time. Not as much as yesterday, but just a little bit to make sure we're all there. So, what's the first thing you learned in accounting class? Besides Skidoo is awesome. We did. The accounting equation, which is assets equals liabilities plus owner's equity. Assets, liabilities, and owner's equity are our permanent accounts. Okay, that's important to know. I talked about it yesterday. I've been trying to reiterate it. They are permanent accounts. That means that they never close. In section 8.2, we are going to be learning about closing accounts. The accounts that we close are going to be considered temporary accounts. Temporary accounts are any accounts that are not assets, liabilities, or owner's equity. Okay, I talked about it in relationship to advertising. If my business has been in operation for 30 years, do I need to know I spent $375,000 in advertising? Do I need to know this year that I spent $1,000 in advertising? Yes. So, when I am looking at my accounts receivable, Jory Wusso, is it important for me to know over the last 10 years, Jory has spent $10,000 with my business? And Braden Walensky's only spent $100? Is that important information a business would want to know? What do we do for really good customers? Yes, we do. So is it important that I keep track of, over the whole life of a customer, what they've spent if they have bought on an account? Yes, that is important information. Same thing for my vendors or my accounts payable. So I would want to keep that information. I'm not going to close Jory's account and then say we're not going to do business together anymore. I need to keep that amount. I need to keep track of all the different types of transactions that I've had with Jory in case we needed to look something up. So when we take a look at closing our accounts, we're going to close all of our temporary accounts. And when we look at a worksheet, our temporary accounts are in which column? Dum, 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 dum. Which column has our temporary accounts? Dum, dum, dum. Income statement. Because adjustments we did yesterday, right? Look at your income statement column on your worksheet. What accounts are in there? Revenue and expenses. What's our permanent accounts? Assets, liabilities, and owner's equity. Would you agree? So, we are going to close our temporary accounts. The other type of temporary accounts we have are contra accounts, and we know one type of contra account, and that is our drawing account. Drawing is a contra account to owner's equity. Owner's equity has a credit normal balance. We keep track of drawing separate so we know, hey, our business did really well this year, except the owner took $10,000 out of the business. So does that mean we need to make any different changes to the business, or do we need to tell the owner to quit taking money out of the business? Well, we kind of can tell the owner that because the business would do better, right? But we don't have to change like our sales or our pricing or our advertising because that worked well. So our drawing account is going to be a temporary account that we close as well. So what we have to do is we close our accounts. And again, the purpose of closing is to get that account to zero. I thought I heard somebody knocking. So if we take a look at advertising expense has a debit balance of $821. Would you agree? Do you see that in your work together? What do I need to do to get that to zero? Right? That's the whole point. Closing an account means we get the account balance to zero. So what we need to do is we're going to go through and we're going to close our accounts, and we're going to close our accounts using the acronym of REID. Okay? Revenue is the R. Expenses is the E. Now, it's not R-E-A-D, it's going to be I. and the I stands for income summary, and then the D would stand for drawing. So when we get to closing entries, I need you to remember to read. So the first R, we're going to close revenue. Revenue, what is our revenue account? Sales. What is the normal balance of sales, debit or credit? Credit. So if it has a credit balance, what do I need to do to close it? Debit, right? That would get sales to zero. So if I debit sales, I need to have a credit. So we need to go through and have a temporary account that we're going to close accounts into just to hold it for a moment. And that is going to be our account income summary. Remember I said you'll see it, ignore it. Well, now's the time where we're going to stop ignoring it. So income summary is going to be a temporary account that we're going to use to close accounts into just to get it to one point, just to make it a little bit closer, clearer. Okay? So when we do our closing entries, we are going to use exactly the same journal page that we did for our adjusting entries. So when I look at my work together here, you will see in the very top it says, hey, adjusting entries, this looks familiar. Didn't we do that yesterday? It is. Yes, yes. So adjusting entries do not have any source documents. Closing entries are not going to have source documents either. So what we need to do is right here, I'm going to go ahead and click right below my adjusting entries, and I'm going to type in closing entries. That's going to stand for our source documents. Now, I gave you the acronym for a closing entry, REID, Revenue, Expenses, Income Summary, Drawing. So that means how many closing entries are we going to have? 4. Each one of those entries needs to have its own date. Our closing entries are going to be done on the last day of the fiscal period, which is also the same date that we did our adjusting entries. Or in this case, in our directions, when we look at my worksheet, it says for month ended July 31st, it's going to be done on July 31st. So what I'm going to do is I'm going to do my first acronym, and that's going to be the R for revenue. So I'm going to put the date of the 31st. Revenue needs to be to 0, and my revenue account is sales. Sales has a credit balance of $5,511, so I need to debit sales. $5,511. I can spit it out. What am I going to close it into? Remember that temporary account I talked about? What's the name of it? Not drawing. Income summary. So, based on this entry right here, sales now has a 0 balance. Okay? My second letter for my closing entries is E. E stands for expenses. The point of the E for expenses is to get all of my expenses to 0. I'm going to put the date of the 31st. Now, when I look here, expenses have a debit balance. So what do I have to do to each one of them? Credit. But when I journalize, what has to go first? My debit has to go first. Okay? So what I need to do is I am always going to close things into income summary. So income summary is going to go first, but I don't know how much yet. So I'm just putting my account title in, but I'm not putting the amount yet. Then below that, I'm going to put in my first expense, which is advertising. And I'm going to credit advertising, $821. Insurance, I'm going to credit for $300. Miscellaneous expense, I'm going to credit for $347. Supplies expense, I am going to credit for $713. So this is my second closing entry. Do my debits and credits equal? No. What do I need to do right now? So I need to add up my 4 credits. My 821, my 300, my 347, and my 713. And that is going to be the total. Yeah, I'm in the wrong spot. Look. Yep, you have them as debits. They need to be credits. Yep. Anyone get that number? What is my debit?
2,181.
2,181. Does anyone concur? You agree? I like agreeing. Going old school, going to my whiteboard. I know. So I need eyes up here. Ready? So far, what have we closed?
Revenue.
Okay. I closed revenue into income summary. What's the next thing I closed? Thank you. What did I close it into? Income summary. Now I'm to my I. What starts with an I? Income summary. All right. This is where I need you to think a little bit. So far, we've done 2 closing entries. I've taken revenue, and I put it into income summary. And then I took my expenses, and I put it into income summary. This will be worth candy. So I got people's attention. The value that is in income summary right now is equal to what? Yes. That was a pretty fast response. Awesome, awesome, awesome. Get 3 Smarties for that one. I know. Now, but think about it. The difference between revenue and expenses is what? Your net income or net loss. Would you agree? That is the whole purpose of your income statement column, is to figure out, did we make money or lose money? So what we've done so far is we took our revenue and put it into one account, and I put my expenses into that same account. The difference between that is going to be my net income or net loss. Who gets the net income or net loss? The owner. Does that make sense? So our third closing entry, and this is always the one that people do wrong, is going to be this one. Because they go through and they're like, I don't really know what I need to do. But you need to remember, we are in business for the owner to make money. That money does not go to the owner until we physically put it into that capital account. And that's what we're doing with this third closing entry. We're taking our net income, our profit or our loss, and transferring it over to our capital account. Our last closing entry is going to be the D. And the D is going to stand for drawing. And drawing is going to go into capital as well. So now here is your acronym to help you remember your closing entry. REID. Revenue, expenses, income summary, drawing. And if you remember it in that order, you remember the words that we say, those are the ones that are being closed. When you say revenue, All right, the first thing you have to do is close revenue, expenses, close income summary, and close drawing. When you close something, you take a look at the value of it, and we get it to 0. The tricky one is income summary. You're like, what's the value of income summary? Well, your net income or net loss. What is my net income or net loss for this assignment? Yes, you do.
$3,330.
Where'd you find that?
In net income on the worksheet.
On your worksheet, would you agree? So it's already on there because we've already gone through, so far at the end of our fiscal period work, we did our worksheet, we did our income statement, we did our balance sheet, and now we're doing our adjusting and closing entries. So our business already knows what its net income or net loss is. We just have to therefore get it to the owner. And that is the point of our closing entries. So let's journalize now our third closing entry, again, which is the I for income summary. Now what happens though is we already determined that our business has a net income. If we have a net income, should capital go up or down? Up. What's the upside of capital? Credit. So we are going to need to credit capital. If we have a net loss, we would have to debit it. So the order of what account gets debited or credited for our third adjusting entry will change whether or not we have a net income or a net loss. So I just need you to be aware of that. So our third closing entry right now, we're going to start with the date of the 31st. We do have a net income of $3,331. So income summary is going to be debited. And our capital account of Darlene Wong is going to be credited. What's our last letter for our closing entries? D for drawing. And again, we're closing drawing. So when I look here, Darlene Wong drawing right here has a debit balance of $2,100. The purpose of closing is to get it to 0. So if Darlene Wong drawing has a debit balance, what do I need to do to it? Credit it. So Darlene Wong drawing is going to be credited, and Darlene Wong capital is going to be debited. Now, for some reason, people get to this last one and think, oh my goodness, I have to close capital. Don't do it! Never close capital. Capital is a permanent financial account, okay? So it always has to be open. If you don't have a capital account, your accounting equation doesn't work anymore. So you need to remember we're only closing drawing, and you have to look at the value of the drawing account, and that's one that we're closing. Ready to post? Sure. Okay. So we're going to start at the top and work our way down. The first account that we're going to close is going to be sales. Please notice this note right here that you don't get a lot of things wrong. It says note. Type a 0 in both the debit and credit balance column to indicate a 0 balance. Okay, got that. So sales. Date is the 31st. Post reference is going to be 4 because we're on journal page 4. I am debiting sales $5,511. Wait, sales has a credit balance of $5,511. What's my new balance? 0. What do I have to do? 0 in both the debit and credit. If you don't do that, it'll mark it wrong. And that would be silly. The last thing you do is put account number 410 back up on top to work back to your journal. Don't ever go through and just fill in all these numbers at once and then go through and post. The order and purpose of how you post is very important. The next account that I'm going to go to is income summary. We don't have anything in income summary yet, so I have to start with the date of July. The date is the 31st. Post reference is 4 because I'm posting from journal page 4. And I am crediting income summary $5,011 at a zero balance before that, so I have a credit balance of $5,511. Account 330 goes back up on top. Make sure you do it in order or it will not work. You have to post top down. So, I just posted the income summary as a credit for $5,511. The next one I'm going to do is income summary, and I'm going to do it as a debit of $2,181. So my new balance is not $2,181 because I had a credit balance here of $5,000. Then I'm debiting it for $2,181. Do I have a debit or credit balance? Credit. For how much? $3,330, which magically equals our net income. Account number 330 goes back up top. After I do income summary, I'm then going to move down to advertising expense. Advertising expense gets credited for $821. It now has a zero balance. I need to put a zero in both the debit and credit column. Then I take $510 and put that back up top. Do the same thing with insurance expense. Miscellaneous expense will be done exactly the same way as the other two. Date is the 31st. Post reference is 4. Supplies expense. $540. Now I'm to line 14 of my journal, which is the debit to income summary of $3,331. Now the whole point of closing income summary is that it gets the balance of income summary to 0. So I'm going to go here and put the day of the 4th. I need to debit income summary $3,330. If for some reason when you get to this third entry and your income summary is not to 0, somewhere, somehow you've made a mistake and you need to find and fix it. Next, I'm going to go to Darlene Wong Capital. Date's the 31st. Post reference is 4. I'm going to credit Darlene Wong Capital $3,330. Darlene Wong Capital had a previous debit balance of $6,543. I'm going to add to that $3,330 for a new capital balance of $9,873. Account 310 goes back up top. I then need to do my next posting, which capital is debited $2,100 from closing of my drawing account. My new capital account balance is $7,773. Taking account my net income and drawing from this fiscal period. My last posting is going to be my drawing. Okay, now, we just went through and did our closing entries. I would like eyes up here for a moment, even if you're still filling it in. Don't worry about the work together and on your own at this moment. The whole point of closing entries is to get those accounts to zero. So, when I look at my worksheet, everything that's on the income statement column of my worksheet should now have what for a balance in its ledger? Zero. Every single one of these should have a zero balance. If, for some reason, your accounts have a balance in there, you've done something wrong. That's one of the things I like to know about accounting is there's always a way for you to check to see if something has not worked correctly. Now, we did revenue, expenses, income summary, and drawing. Those are our 4 closing entry. 2 of those are specifically on my income statement column. Income summary doesn't have a balance on it, so it's kind of there, but it doesn't show up. The other one that should be closed is going to be Darlene 1 drawing. That means when I take a look at my account numbers, all of my accounts from 100 to 310 should still have a balance or be open. It could be we have an accounts receivable or an accounts payable that truly has a zero balance, but we did not close them. Everything from drawing afterwards must and needs and is required to be closed at the end of the fiscal period to get our books ready for the next year. I need to know what my revenue is for this year. Am I profitable? I don't need to worry about any of my previous fiscal period work. Just this period. Does that sound good? All right. Remember, REID. Revenue, expenses, income summary, drawing. One of the things that's a little bit difficult on doing this assignment is if you have something wrong, you have to click on each one of the ledger accounts to open it up to find and fix it. Please remember, you will get a lot of points taken off if you don't put zeros in both of those accounts when they're closed off.